Hi everyone, today we're going to go over what mutual funds are. What are mutual funds? Mutual funds are basically portfolios that are actively managed that you get to buy into. Okay, you'll see a lot of these in your 401ks and different retirement accounts that you may have at work. As you buy in, you'll buy shares of these mutual funds. And the reason they're called mutual funds is because it basically pulls your money and other people's money in to buy this portfolio. There's different types of mutual funds. For example, there's stock mutual funds that are made up of stocks that are actively managed that can be bought and sold on your behalf to try to give you a nice rate of return. There's U.S. stock mutual funds that are made up of only U.S. stock funds that could be growth, trying to grow your money over time. They could be value companies that are more like your AEPs of the world, that are more, let's say, well established. There's also international stock mutual funds that are basically stocks, a portfolio that's made up of only stocks from overseas. And there's a little bit of mixture of both. Around 50% stock US and 50% stock overseas in just one particular investment. There's also bond mutual funds. Basically, these individuals that run that fund will buy and sell bonds on your behalf, and it could be made up of different types of bonds. You could buy a corporate bond, which means that corporate bond fund could be only made up of different companies' bonds that usually will pay a little bit more. It could be made up of U.S. treasuries that it's basically only has government bonds in it. You could be looking at a municipal bond fund, which is basically a fund that only has municipal bonds from different states. Could be your state, could be different states that try to give you some tax-free income, but also a lot of diversification in one investment. There's also ones that are mixed. You know, there's some that are called balanced. That's 60% stock and 40% bonds, right in one investment. So they can have a different mix and match. There's also ones you may be a little bit more familiar with in your 401ks or retirement accounts. You might see these, they're called target date funds. Target date funds basically go out and when you're going to retire, let's say you're going to retire in 20 years. It's 2024, so we're looking at, let's say you want to buy the 2045 fund. That's when you want to retire. Every year, basically the fund will become more and more conservative. It'll buy more bonds, sell some of its stock to try to ease the ride as you get closer and closer to retirement. If you're 40 years out from retirement, you're going to have a lot of stock in it. Why? Because you have a lot of time for good markets and bad markets so you can grow your money over time. As you get closer to retirement, you want that to be more and more conservative. The fund itself will become more conservative, so then you'll feel a little bit better as you get closer to retirement over time. What's also really nice about these is you don't really have to know a whole lot about different investments. They take care of it for you. The biggest thing is just keep hammering these investments and eventually you'll be able to retire. Hey guys, thanks for taking the time to watch that video. If you like what you see, make sure to like, comment, and subscribe. If there's anything you want to see in future videos, make sure to put it in the comments section and we'll try to get to it as soon as we can. But thanks for taking your time out of your day and don't forget to subscribe.